What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol CCXI for ChemoCentryx. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be a bit of an update, and I also want to address the big outcry in the comments section from the last video about me not mentioning the PUDFA date here. And of course, I marked it off on the chart for you guys. It's on the 7th. Big decision there. The stock is either going to do something like this, huge run, or something like this and come back down into the lows, whether or not there is approval. So all things considered, this is trading technically. I got a lot of flack for essentially saying, don't be a buyer up here and chasing these highs. How did this unfold, right? It did pull back, and it pulled back where? Into the support trend line, which we had mapped out from the prior video. Don't believe me? Go back and watch it. I'll actually link it for you guys right up here in the top right-hand corner so you can see for yourselves. Regardless, I'm not to say you're right, I'm wrong, you're wrong, I'm right, but I am saying it's respecting the technicals, so we need to go off of that moving forward. In terms of the candle that's developed on Friday, obviously it's an inside bar. It's completely inside of the Thursday range there. So it's like we've made a step in the right direction for upside, but we're not out of the woods yet from this pullback into the support trend line. What I would be watching out for would be this pattern here on the 30-minute intraday time frame, right? Technically, I just drew in a bull flag. The breakout point is up and over 1862 with a consolidation or pullback zone being here at 1813. If we can remain in the zone, fine. Healthy consolidation, take the break up and higher to get into the high of the, essentially container bar range. And that's going to be here. Let's throw a price level on there at 19.25. That's the first target. After that, we know there's a lot of price interaction at this area right here. That's at 1956. That's your next hurdle, and then unlocking the highs up there at 2060, right? So that would be how you walk these levels up, waiting for confirmation one step at a time. If you want to trade it more conservatively, then maybe you don't take this break to get into here. Maybe you take the break of this to get back into the highs. There's a number of ways that you can do it that will be sort of adjusted for your own personal risk tolerance. So that's what I'm seeing to the upside. To the downside, obviously you do not want to be involved in this stock if there's a negative reaction to whatever news comes out on the 7th. I would argue the line in the sand is simply going to be, now that it's held once, the support trend line. If it's revisited, I would expect it to break, and especially if it happens on a catalyst day, this thing's likely going to see some serious range to the downside. I don't want to say where it's going to stop because there's no saying, right? If people just run for the exit signs here and want to bail, again, it could go here, it could go here, it could go here, it could go to sub 10, right? There's no real saying on where it's going to stop. These would just be the pit stops where I would start to watch for some sort of reaction. You can check them out on your own here. So that's going to wrap up the video. If you enjoyed it or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.